Welcome traders to this video. I'm going to be discussing the dollar index in relation to currencies, and also I'm going to be talking about the optimal trade entry and how I've been using that for great success in my recent trades. So let's hop into this discussion. All right, so I was watching one of the ICT videos and he pointed out how the dollar index is pretty much it's bullish, and then he anticipates the price that comes here into around this 105, between 105.5 and the 106 whole level, where there is a volume imbalance. And what is that? A volume imbalance is basically where price has not created or closed a candle. It just created a wick between this space, but no closed candle. So basically, the algorithm is most likely going to seek here this area and close here with the candle, or either test this area, making it bullish for the confluence. Okay. Also, we have an old high here that's right below this area. So that's going to be buy stops and a pool of liquidity up here as well. That's going to fuel into this gap of volume imbalance. All right. So on this slide, this is a hour chart of the dollar index, and I was just basically putting a line on that old high. We might see something how price of the dollar index come back and then rally up forward into this old high volume imbalance, and basically just setting up the stage for currencies, because that's going to make currencies bearish. So that is why I'm starting my analysis on the dollar index for a higher time frame confluence. All right. So, discussing the optimal trade entry. Uh, this is basically the optimal trade entry. This is a bearish setup model for it. I've been using the optimal trade entry with great success. This is the only model that I've been using recently, and I just want to discuss it quickly. Okay, so basically we're looking for a 1-2-3 setup that's in line with high time frame confluence, which we just discussed over the dollar index. All right, so as far as the time frame goes, I mainly use the 5 minute, the wicks of it. So the wick, the high of the wick here, on the low of the wick in this scenario, and I explain this on the next slide in more detail. So we use the 5 minute. Um, Higher time frames, like well, I won't call it a higher time frame, but on the 15 minute and time frames above that one, um, I think I see ICT using the bodies of the candles on those, but when he used it on the lower time frames, he used the wick. So that's why I use the wick as well here. So the timing of it, you want to be trying to trade this PDA array around line session 2:30 a.m., 5 a.m. through 5 a.m. in New York, 8:30 to 11 a.m. It's extremely important that you have your chart set to New York Eastern Standard Time. That's because ICT explained that that is how the markets run. That is the time that the markets runs on. So if you're using the wrong time, you could be out of sync with the markets. All right. So before I go over to take profit, basically, you're looking for a swing high, swing low, and a move back up 62% of that within a certain time zone, which is, London and New York, right? And then you enter on the blue, put a stop behind the first high in this case. And then now we're going to talk about the targets, which you want to target sell side liquidity. Okay, so this could be previous daily lows, equal lows, old lows. So if you look on the left side of your chart, you notice that price may came down here, created a low, we went up, created another low that's equal to this one, and then moved away or something like that. So if you see this price that lows have not been tapped, then the algorithm is most likely going to want to come into this area of pool liquidity and target that. Okay. Second way is through fib. This is the way I usually do it once price create that, so I see the high, the low, and the price comes up on the 62%, and price starts to reject and fall. I typically target this level first. And like I said earlier, if I see sell side liquidity, I will take partial profit here and let the rest ride as I wait to see its price reach this sell side liquidity here. Okay, so that's where you take profit on this. Here's an example of it on February 23rd. As you can see, I have the only thing I have on this chart as far as like an indicator is sessions. You don't need that. This just makes it quicker for me to spot the time and stuff like that. So I've just created a sessions uh, on my chart for where it's 8:30 to 11. Well, in this case, no, line of session from 3:30 to 11, and over here is 8:30 to 11. My bad. Sorry about that again. That's 2 to 5 line of session, and then over here is 8:30 to 11. Alright, so that's what this coloring is. Alright, so here's the swing high, swing low. Price comes back at the 62%, gives you about a 1 pip drawdown. And this is typically my take profit here. So price came in this case study, it came to the first swing low, then to the -5 and then -1. I'll be showing these settings on another slide. This is for this day, 30 pip max profit. So what I like to do is do $10 a pip. So this could have been like a $300 move in London. Okay, so that's that's more than enough for me. Most people, that may not be nothing to them, but that's more than enough for me. Okay, so price created equal lows here. Then the market moved up, came back down, swept through these lows, pushed up into New York, where you have 8:30 to 11 a.m. session. You see your high here, down to your low. Price moves up. You enter on the 62%, the blue level. It overshoots it by 5 pips. Comes back down. You have 5, 10, $150 here if you're using a standard. Take profit here. Comes back up again for another entry. And like I said, I like to use the 1 minute. So once I'm seeing this, I will switch over to the 1 minute. This is the 5 minute, but once I'm seeing this move, I'll switch over to the 1 minute and see how price reacts on the lower time frame. Okay, now for observation. And as I see its price moving away, again I'm going to target this first level again. That's another 150. And as we can see, price navigated to the -0.5, and right before noon you had about another $300 move if you're using a standard, which is $10 a pip. Alright, so if you had traded both of these to the max take profit for this day, this would have been about $600, $700. Okay, so let's go to the next slide. This is the settings. You have your regular settings, and then you have the optimal trade entry settings that ICT himself has shown everybody. So you got 62. This is the entry 70705. You can enter there, but he often explains that you will want to enter out the first one. Alright, so you take a minute to look over these settings. Okay, so alright, so to recap on what I'm expecting for next week, since the dollar is bullish, and we went over there on the first slide how the algorithm is most likely going to want to seek the volume imbalance off the daily, so that would most likely make the dollar bullish. Okay, so we can expect, since that's the case, we can expect currencies to go lower. And for what I'm looking at, which is the Euro USD off the case study, we're gonna look for bearish optimal trade entry moves. That's pretty much it. It's pretty much simple, straightforward. This is a great strategy. I appreciate Mr. ICT himself for giving everyone this knowledge. As I'm a humble student, I'm constantly learning, and If anything, I'm a student first. I just want to discuss this strategy with everyone, as I've been having a lot of great success with it, and I look forward to having more successful days with this strategy. I'm going to be trying to create videos and more videos on trade entry heading forward, and how it works on many different days throughout the week, throughout the month. So with that being said, I'll catch you guys on the next video.